Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be discussing its return on investment, or ROI. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We've spoken a decent amount about the 365-day running ROI, or the 1-year running ROI. You're basically just looking at what is the return of your investment on Bitcoin had you bought it 1 year ago. And obviously there's been a lot of discussions as to whether, it's following the 2016-2017 cycle or whether it's following what happened in 2019. I've been a big sort of proponent of it's kind of a combination of the two, right? It certainly had similar structure as the 2016-2017 cycle for a while, but kind of like what we saw in 2019, it eventually fell back down to just above 1 for a little while. So you could almost argue that it's very similar to both of the prior cycles. And it goes back to the idea that we've talked about, that every cycle is going to throw you a curveball, and this cycle is proving to be no different. Certainly from the cyclical point of view, Bitcoin followed a lot of what we saw back in 2016 and especially, really early 2017. But from the monetary policy point of view, Bitcoin did eventually get this breakdown in the running 1-year ROI, because the only way for the running 1-year ROI to have continued to stay at a 2x or continue to go up like it did in 2017 was for the price of Bitcoin to go parabolic in February and March, because we know it went parabolic last February and March of 2024. Obviously, it didn't do that. We've seen a lot of things happen because of that, right? Ethereum went home. Like we said before, right? You can't get any major shifts in monetary policy until the markets do something different, right? If they just keep on going up nonstop, why does the Fed need to pivot? They don't, and therefore QT continues and interest rates stay high. When you get pain, when you see the markets break down, that can eventually usher in much looser monetary policy. So when you look at something like the running 1-year ROI, to me, it looks like, the cycle really started off kind of just doing what it did back in the 2016-2017 cycle, structurally as well. But then as we got into the post-halving year, it started to follow more so what it was doing in 2019. And maybe the reason for that is because 2025 might be similar to 2019 through the lens of monetary policy, right? We know that the Fed ended quantitative tightening in 2019. Perhaps they will end quantitative tightening in 2025, right? I mean, it's always possible they go longer than that, but had you asked me 3 or 4 months ago, I maybe would have said longer. But given the recent drop in the markets of 20% in the stock market, it certainly opens the door for them to potentially end QT sometime in the coming months, especially if things don't improve between now and then. So here's the running 1-year ROI. Again, kind of a combination of 2016 and the 2019 cycle. You could also look at some other metrics. One of the interesting ones to look at is the 4-year ROI. What's interesting is there hasn't really been a time in Bitcoin's history where had you bought it, you were not up 4 years later. But it is getting pretty close to 1, right? I mean, you can see had you bought Bitcoin 4 years ago in April 2021, your ROI today would only be about 30% because you essentially bought at the top of the market. But I mean, if you look at others, like the 3-year ROI, it actually did dip below 1 a couple times throughout history already. So you have the running 1-year ROI that tends to bottom around 0.2. This was a metric we followed a lot back in 2022. As we said, a lot of times Bitcoin will bottom out around the time that the 1-year ROI is 0.2, meaning about an 80% drop in Bitcoin's price. That will also, typically usher in a major market cycle low. And you can see that that's essentially where it bottomed out at, around that 0.2. So an 80% loss, kind of like the cycle before that, and the cycle before that, and the cycle before that. You can also see that there's diminishing peaks in the running 1-year ROI, but you should also note that the peaks that mark the top are not always the peaks in the 1-year ROI. For instance, the peak in 2021 actually occurred on a lower high for the running 1-year ROI. You can see that the running 1-year ROI in March 2021 was 11x. I mean, Bitcoin went up 11x over that year, whereas the highest that it's gone this cycle is about 3.37x over the span of a single year. I was also looking at the 90-day, and interestingly enough, you can see that Bitcoin has found a lot of support around the area whenever the 90-day ROI is sitting at about a 25% loss, right? You can see that there's been plenty of times where Bitcoin sort of finds support around that level. So you could argue that whenever that breaks, it would sort of be more of a signal that the cycle is transitioning into potentially the bear market, right? And we'll probably have one in 2026, if not before then. But that is at least an interesting way to, and also, by the way, like when you look at stuff like this, you can see that there was some sort of a similar level back in the 2015, 2016 cycle, right? So once this level broke that Bitcoin's currently holding, right? But once this level broke, the cycle was more or less officially over. So that's kind of a level I've been looking at here to sort of navigate Bitcoin. Also, I mean, it's similar ideas if you were to look at like the weekly RSI of Bitcoin. Like if you go look at the let's just pull it up, but you'll kind of see something similar, right? If you look at the RSI of Bitcoin on the weekly, right, you can see this level continues to hold, and there was also sort of a similar level in 2016, 2017, and once it broke, that was the end of the cycle. And so these are pretty important levels to watch for Bitcoin because I think they kind of communicate the overall health of the market, or at least Bitcoin. You can see that other assets like Ethereum have not been able to hold, these levels, right? They actually broke down a lot more than Bitcoin did. Once again, suggesting why we spend so much time talking about Bitcoin dominance and the importance of Bitcoin dominance and preserving the Satoshi valuation of your portfolio. No one here is trying to argue that Bitcoin can't go down. We're just simply saying that if Bitcoin goes down, altcoins will likely go down more. And if Bitcoin goes up, it'll likely go up more than most altcoins. At any point in the cycle, you can always find a few altcoins that will outperform Bitcoin. But when you look back over a few years, you'll see that, Bitcoin steadily gained dominance, whereas most altcoins just kind of continued to fade. So those are my general thoughts. That's what I wanted to talk about today, at least with the return on investment. You could also look at like the year-to-date ROI of Bitcoin. Look at it in 2025 and note that it does look a lot different than what we saw in 2021. I mean, these 2 years do not remotely look the same, right? They look very different from one another. It also looks very different from 2017 and, of course, 2013 as well. In fact, I mean, if you were to average out just 2017 and 2021, then you get a chart that looks like that. And then if you add 2025 on here, I mean, you can see just how different it is. We'll probably do another video separately just talking about year-to-date ROI. But in this video, we mainly talked about the running one-year ROI, how there's some similarities to the 2016, 2017 cyclical view, but recently there's been more similarities to the 2019 monetary policy view, which might suggest that there will likely be further changes in monetary policy, probably sometime later in as the year goes on, right, in 2025. If you guys like the content, make sure you subscribe, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.